Well, welcome back to another edition of Commodity Chat powered by Trader PhD. I'm Dawson Schmidt, the head of market content. Joining me as always, Ag Market Advisor Nick Lawrence.
Hello.
Well, Nick, kind of a different morning here this morning. We had some summer weather on Monday, but recording this as of Wednesday morning, we have a nice blanket of snow um, throughout the middle of Iowa. It started in western Iowa, saw quite a bit of pictures, and then other parts of the state. Looking at a nice blanket here after what seemed like summer conditions to start the week.
Yeah, went from sitting on the porch in a shorts and my t-shirt to definitely actually snow covered this morning. So
Yeah,
it's been a wild one. But
been a
we've
trip.
had a bunch of moisture, fair amount of heat to get some things going here agronomically, and looking for a promising spring.
Yeah, definitely. Definitely going to be in it for a little bit here before we kind of get into those spring months. But wanting to kick things back off with the markets here, of course, big headlines still coming out of, the Middle East with ongoing attacks from the U.S. on Iran, as well as Israel attacking different parts of the Middle East against other groups. We did have a WASDE report this week, and we're going to talk about that. However, I think there's still a lot of overshadowing going on. The March WASDE report is not really a big one for us to kind of look at in terms of big changes that the USDA makes, but still some things to maybe consider here. But looking at a lot of things with the war with Iran, I just wanted to start off with this one chart here, just mainly because we're looking here at the Bloomberg Commodity Index, and a lot of what we saw with this recent run up, in gold prices, maybe in crude oil prices before we started sending airstrikes to Iran. There's a major rally that we saw in the overall commodity index. But when you kind of look at the agricultural sub index, there's not really much going, or wasn't really much going on there, really up until we started doing these strikes in Iran, and got a lot of happiness with the crude oil market that really seemed to support the agricultural markets too. So interesting to kind of see a little bit of that dichotomy between what was going on with those two.
Yeah, the crude oil market had been, it initially started its rally, believe it or not, really there at the beginning of January. Had some basing action for multiple months, really since September, actually. And they kind of put in its little final low there at the beginning of January and started working higher and kind of testing the upper ends of those ranges. Now, whether that had to do with, the market just naturally oscillating in between ranges, and then lo and behold, this kicks off, or if the market knew something we didn't, um, and it was kind of getting into position, that we'll never know. But it is an interesting coincidence that it kind of started its rally there 2 months ago, essentially. So
Yeah. Well, so the ag markets have had, a huge reaction to a lot of what's been going on. And it's not necessarily because, supply and demand fundamentals have really changed with our grains specifically, but, oil still, I think, has really been taking a lot of the headlines, diesel, gasoline as well with those refinery products. But I mean, looking at this chart, there's a lot of oil production, a lot of natural gas production in terminals, a lot of refineries and refinery terminals, um, kind of being constricted in here in the from what this graph shows in terms of with the effective shutdown of the Strait of Hormuz, that a lot of these trade flows have been seeing a large impact. I did see this morning. There's a bunch of companies in the Middle East that are going through how do you pronounce that? That force majeure.
force majeure.
Yeah. So a lot of different companies going through that, basically saying like, hey, I can't fulfill my contracts because, there's no way that I can get this product moved.
Yeah, and again, is this a this is a downstream thing, really. Yeah, they can't get the product moved and get in position for kind of that next flow. And maybe we'll kind of talk about that a little bit more in a little bit. But yeah, products got to move all year long. And right now, logistics over there are stagnant. And but the beautiful thing about free markets and merchandisers, and I think eventually, um, they figure this out, right? They figure out either alternate routes or they find a way, and uh, they always have. I think eventually they will here too.
Yeah, I mean, a lot of the volatility though for the short term has really been seeping in the ag markets. I mean, looking at heating oil futures and how that's been really driving soybean oil up, really having a big influence on the soybean complex in general. Um, Oil running up, of course, having a little bit of impact on corn. Um, just a lot going on with how, something happening so far away from home is, impacting our prices here. And then, the other side of it is also, the input side of it, looking at fertilizer too. Kind of an interesting graphic that Bloomberg also had here too is that, of everything that comes from the Persian Gulf, essentially the Strait of Hormuz that's comes around from these Middle Eastern countries, all the nitrogen that gets shipped out of there, I mean, they go to a lot of different companies or a lot of different countries. And just a quick example too is, of course, looking at the US, we get a little bit over 50% of our nitrogen from that Persian Gulf, which is currently experiencing those constrictions. Brazil is also a big one that gets a lot of nitrogen from those areas. Australia, another big crop producer. India, a major crop producer, gets about half of their nitrogen from those same areas. And so, you know, I guess we can assume that all the product that's going to be used for this upcoming season is here in the US, but I mean, maybe a little bit of a snarl to come for next year's fertilizer run.
Yeah, again, I'm not in the fertilizer industry anymore, but I feel like at this point, um, this is more of a replacement of supplies issue I think is affecting the home front today. And so what I mean by that is the majority of our supplies, for the next 30 days should already be in place. Um, but as a retailer, I'm worried about replacing my inventory. And so as I'm pricing my current inventory, um, I need to ration that demand through price because I don't know if I'm going to don't know how much or if or when I can get my inventory replaced to keep myself in business.
Mhm.
So that's kind of the way I look at it right now. So I guess the reason I illustrate that is um, I think we can still hold some hope, I guess, in a sense, that this could get resolved relatively quickly, and we just don't have a problem. We don't have a problem for next year, this summer, this fall, that type of thing, and we can move on. So I think there's still hope there for that. Um, and or again, like I was trying to describe earlier, maybe we find other ways to get this supply moved around the globe.
Yeah. And I mean, the acres conversation is still top of mind too. And I know there's that question of, could the issues that's going on in the Middle East, is that going to kind of influence acres here? May not necessarily come from the fertilizer side. I mean, we've had this nice run up in prices for soybeans, a lot more better pricing opportunities for that upcoming 26 crop. Maybe a little bit of an influential thing going on with the acres. Going to be surveying though at the end of or near the end of the month too of our own clients and seeing if there's a little shift from what we've had in our February survey. But I mean, do you expect a little bit of shifting to go on between, kind of current expectations to those future expectations?
You know, I think in uh man, no. Simply put, I mean there in a material way, right? Is what I'm
Hmm.
trying to say. Obviously, I think there is going to be undoubtedly some acre shift, but
Hmm.
I mean to the point where it's like, oh no, we're 8 million less acres or something.
Hmm.
I'm not 100% sure that's gonna be the case. There's corn growing in the south. There's corn in the deep south and planted down there already, and that's where a lot of um, it's where a lot of the acre increases have come from in the past. Um, and, kind of getting up through, the Corn Belt here, through the I-states. There's a lot of producers get a lot of fertilizer, either bought and or applied in the fall, on a lot of acres. I know there's a lot of acres get done in the spring, but, um, long story short, I think the producer's gonna make it happen for the
Yeah.
most part.
Yeah. I mean, from what our survey told us, what you've heard from clients, what I've heard from a couple clients and a couple farmers back when we were at Commodity Classic is that, I mean, it seems like corn is still the favorite commodity. It was, kind of based on price, in some ways. And, if, to your point, if we have all these fertilizer supplies secured for this spring application season, what's to stop us from, staying heavier on corn this year, compared to what, people might be thinking if there's a larger shift?
Right. Yeah. I'm just, and, profitability. Yeah. I'm just not, I personally just don't quite see yet, but, we'll let the survey speak for itself.
Yeah. All right. Well, so we did have a WASDE report on Tuesday. A little bit to expectations was, pre-report. It was kind of funny, there was not anything that was really expected out of this report in terms of the U.S. balance sheet. Kind of came out to be the case for this go round, and that was, with zero ending stocks changes for U.S. corn, and soybeans and wheat, and I think cotton, and as well as rice. And so, I mean, soybean side of things, there was a little bit of a shift within the balance sheet, as well as rice, mainly just with exports, imports, crush, that side of things. That still ended up keeping our ending stock steady from the previous month.
Yeah. So domestically on the surface, uh, boring, right? Just because of the no change. Um, but as you mentioned, kind of, internally on soybeans, there was some movement, and I think really, after, kind of watching yesterday's trade, um, it was interesting to kind of see a little bit of, I guess, a post-report relief rally in a sense,
Mhm.
but then really soybeans, man, I think with everything that's going on with, energies and RVOs and those types of things, and kind of the whole reason beans have been, moving higher with bean oil to begin with. And then, we get this reduction in, in soybean, oil stocks.
Mhm.
Um, yeah, I don't think the market ignored that. I think it, I think it noticed.
Yeah. And that was kind of a little bit of a flip-flop too, because absent of the RVOs, USDA is expecting about an 800 million pound reduction in terms of what's going into biofuels.
Yeah.
And then that was, for the most part, offset by a 750 million pound increase in the food, feed, and industrial usage domestically. And then you came on top of that with production of soybean oil, is that, we're still crushing a lot. We're expected to have crush higher compared to the previous month's forecast, but yet at the same time, what is it? They lowered extraction rates,
Mhm.
basically favoring meal. So a little bit of a script flip there, that production is actually expected lower from the previous estimate,
Yeah.
that
Again,
based on those extraction rates.
yeah, I think what the market was really like keying in on, and again, I don't think it ignored it, was the higher crush rates with the lower soybean output, and that just, in a vacuum, that pours fuel on the fire of we need more soybeans because of more of
Hmm.
more, soybean oil demand, kind of in a way.
Hmm.
Um, so anyway, domestically, pretty boring. Other than that little nugget, I guess you could say, was just that internal soybean complex movement.
Yeah.
Um,
Global balance sheet, though, I think was the place to kind of look at too, specifically Brazil, and even with corn, looking at Ukraine. And so, I mean, it was not anything to gloss over too, that we had what, a 3.8 million metric ton increase in that world corn ending stocks, based on what, higher corn production out of Brazil, higher Ukrainian production as
Yeah.
well.
Yep. That it the world ending stocks for corn grew a little bit, which is probably slightly unexpected. I mean, global demand has like up to this point really kept too much growth from happening on the global balance sheet.
Hmm.
And then to see that Ukraine and Brazilian production could kind of move that around. Yeah, that was interesting. So kind of have to keep an eye on that. Does that trend a certain way? Um, does corn get, you know, cheap enough, or is it cheap enough to stimulate some demand and kind of scoop up some of those supplies or what have you? So it's something that I think kind of keep an eye on moving
Hmm.
forward. Is the the global demand and the global balance sheet for corn has really been one of the bright spots.
Yeah, for sure. Wanting to talk about kind of a little bit too of that, you know, USDA came in with that. They also, when they raised Brazilian corn, they also lowered Argentinian corn estimates. And, we've seen a bit of an ongoing dryness here down in South America where precipitation has been below normal. It seems like there's been a lot of rain in like kind of the central parts of Brazil, central eastern parts of Brazil. And then everywhere below that, it's kind of been spottier or just completely drier compared to normal in a lot of these key growing regions. CONAB was willing to recognize that, or I think recognize it a little bit, and then other private estimates came in with lower um, Brazilian soybean output, specifically for southern Brazil. But USDA kind of stayed with its 180 million metric ton forecast. But it kind of begs the question, could there be a little bit more of adjustment as um, the harvest down there progresses, because they're not done harvesting that soybean crop.
All the way to the south,
So I
yeah.
mean, begs the question, is there a little bit of a chance for that?
Um, I mean, I think on the personally, I mean, personally, in my opinion, the soybean crop, that first crop, I mean, I think it's a wrap. I mean, I don't think you're seeing anything that
Mm.
is too worrisome. In my opinion, I think the market's starting to shift towards focusing on the safrinha crop.
Mm.
Um, in that central Brazil area is getting plenty of precipitation. It's really that Parna and Rio Grande do Sul area that is kind of staying dry there. But unless I'm mistaken, I don't even think that's I don't think second crop corn's up and going there yet. So
No, and it really doesn't. That's probably more the summer corn
right,
areas
yeah,
that are down there. But yeah, Safrina is mainly focused in, Mato Grosso.
yeah,
Much of that's grown there and a little bit outside of that. But I mean, you're not really getting down south for that second growing season for corn.
yeah. No, to me, I still don't see too much threatening there. I mean, I know that um yeah, the USDA reduced some production there for some dryness to Argentina, which you know I think that's probably fair. They've had dryness and continued dryness. You can see it on past month. They've continued to be dry. But as far as Brazil is concerned, I just don't see too much of a problem.
Yeah. I mean, it was kind of interesting to see too. This is a Brazilian NDVI data that we're looking at, is that, heading through the late parts of December, heading through January, NDVI down in Brazil was a record. And so, I mean, that really stepped back in February and coming here into March. But at the same time, I mean, if you had that long period of, I guess, lush green of when it was supposed to be,
Too much
um,
water,
yeah, I mean,
really.
it kind of goes back to your point of like,
Yeah,
yeah, it's hard to really point out a lot of issues with at least that Brazilian crop, mainly because it seemed like what they needed is what they got during our winter months.
yeah, I agree. Now there's a little bit of a reversion to the mean.
Hmm.
Nothing, no warning signs for me yet.
Yeah. Bringing things back though, real quick though, with that cotton balance sheet, again, no changes. But we're still looking at a burdensome supply. Uh, with the ending stocks to use. We're looking at the highest stocks to use ratio since 2019, 2020. Still seeing a little bit of a problem on the export side of things, though, is kind of looking at, just what we've been shipping has been below normal. I think our export pace is about 10% behind last year. Total commitments is about, that 10 to 12% behind last year. Really would like to see shipments pick up, but I'm kind of thinking that, our current ending stocks could maybe go higher just based on exports. Kind of looking at a little bit of a worry here that the USDA could reduce that export forecast here in the future.
Yeah, unfortunately, right. We are in and kind of moving through peak export season, and we really need a business to continue. We've had blips of it, right? We've had blips of demand kind of show up. But as you can tell by the, obviously the graph that you made, still behind, just hasn't been enough. Trying to catch up. I just don't know if it's going to be enough.
Yeah.
It is a relatively bearish situation. And then domestically, and then even globally. Globally, the balance sheet is growing still, and mainly based off higher production in Brazil and China. A little bit of lower production there in Argentina, based off acres. But and India is trying to scoop up supplies, but for the most part, it's a burdensome situation, and we may, continue to try and look for this low price cure,
All right.
which could be we'll see. We'll see what happens with South American acres next year. But USDA did comment on Argentina reducing acres a little bit this year. Brazil, it's speculated that they might be reducing a little bit of acres, and so maybe there's a little bit of a shift, potentially, that maybe we've reached some peak acres down there for the short term, and maybe the market's going to discourage a little bit of production. That would be beneficial longer term.
Yeah, and I think a lot of that, or I think some of that has already been occurring, because that was kind of, CONAB is expecting lower acres for this current season. We saw their planting pace, or Brazil's planting pace, progress, and then there was still some reductions in terms of from what was initially expected for acres versus what we got. And so that's a little bit of the difference between CONAB again and USDA, is that USDA is expecting record production for 2025, or for the current season, versus Brazil is actually expecting lower production for the current season, just based on acres. So I think there's already evidence that, lower prices in Brazil and around the world is kind of already discouraging a little bit of that, letting those farmers find a different profitable crop to essentially switch away from cotton. So maybe a little bit of that going on. But I mean, you look at their export pace, I mean, they're exporting a lot of cotton still. Where we're not exporting any to China, they're getting some shipments still done there, as well as looking at a lot of the same markets that we've been diving into: Vietnam, Bangladesh, Pakistan, a lot of these same places where we've seen a little bit of increase. Brazil also has. So, I mean, there's a lot of competition out there.
Yeah, I think Australia's taken that China market.
Yeah, a little bit as well.
It seems like.
Yeah. So, some definitely things to watch for that cotton market, to see if we can kind of get a little bit of turnaround here. If, we get a little bit of a step back in global production, that would allow us to help with these prices. Wanting to focus lastly on, kind of the beef supply situation. USDA didn't come in with huge changes between beef and pork, so I guess focusing still on that beef. Lots of beef still coming in the US. I mean, right?
Yeah, I've been, you shared this little graphic with me, I don't know, a week or two ago, and I think even we've touched on it on this podcast before. But it's important to remember that the 26, as of right now, beef supply is said to be basically top 5 in the past 16 years of essentially beef in the freezer. So we need to kind of keep that in mind. And price is a function of supply and demand, right? And so the beef supply, according to these numbers and this data, beef supply is relatively adequately supplied, or at least projected to be, uh, uh, the balance of, after we get 25 done, and then in through 26. So take that for what it is.
Yeah. I mean, just some quick stats that beef production itself here in the US is supposed to be the lowest since 2017. But records or imports are supposed to be a record and account for a record share of total supply. So, I mean, we're not slowing down on that beef import situation
For now.
for now. I mean, it seems to be like demand is there. We're not slaughtering cows like we used to. We're kind of done with that part of the liquidation cycle. And so that's increased that total demand for, lean ground beef and other lean products that, we're not getting from cow slaughter. That's essentially what we're needing to get from these imports. So, I mean, steady supply, I guess.
For now.
Yeah.
But I mean, this is such a long-term,
Mhm.
big macro deal. Um, I do think there are, producers globally that have participated in um, liquidating um, some lower performing, parts of their herd, Canada, Brazil, Paraguay, all of them, right? And I think there's a
Mhm.
lot of low hanging fruit that's been picked. And so I think eventually those producers, you know, Australia, everywhere, I think eventually those producers are going to want a little bit of a higher bid also.
Mhm.
And maybe, that starts to pressure imports, maybe. Um, but man, that ain't next month. So
Mhm. Steady as we go, or I guess higher for now on the import side of things. But yeah, I think that's going to wrap up our WASDE discussion. Again, not a huge amount of changes. Going to be looking forward to what the prospective plantings report, quarterly grain stocks report at the end of the month that might have a little bit more of a weight for these markets, especially as we're looking at ongoing conflict in Iran and how that's going to actually continue to shape things up here too. So a little bit of a quiet WASDE for this month, but potentially some different things to be looking at here in the short term.
yeah,
But that's going to wrap up our conversation and appreciate you watching. And I'm Dawson Schmidt,
and I'm Nick Lawrence.
and this has been Commodity Chat from Trader PhD.